Hey, welcome back, everybody. We're doing another weekly review. We have a ton to talk about. I really like that we're sitting in a studio that doesn't look like a sauna anymore. We actually have some things going on that looks a lot better. So that's a lot of fun. But you just wrote a piece, and we've been making some moves in the accounts. People have been seeing probably transactions come through from Schwab. You just wrote, again, a long piece, I think yesterday that came out, talking about what's happening in the markets and what we're doing in reaction to that. So talk a little bit more about that.
Yeah, happy to. If you haven't yet read it, I do encourage. It's a long-form piece, so it takes maybe some getting used to, but it's on the website, One Step Towards Cautionville. If you don't get those emails, there's an area on the homepage you can sign up. We don't sell your email. We don't solicit. We just literally send our content out. Hopefully it's how you got this, but please do take a read of that. It is a glimpse into what we're thinking here. Markets have been strong all year. In fact, they were strong last year. I think we've been very poignant in our views over the last 18 months of the markets and our positioning. There's certain areas of the markets, tech in general, that seem to be getting a little ahead of itself, in our opinion, and we've been in these positions. We've been in these positions for a very long time, so we're getting stretched in valuation. I actually take a deeper dive into NVIDIA, and I look at the forward multiple of what people are sort of valuing this company for, and I can understand why the stock price is where it is and why it's done what it's done and propelled the tech sector in general, the market as a whole, to the levels that we've seen. And that's great. I love it. I think it's phenomenal. NVIDIA is an unbelievable company, make no mistake. However, their threat is competition. And everyone in that space, whether it's ARM Holdings, AMD, Taiwan Semi, Intel, they are on a foot race to try and replicate a product similar to NVIDIA. Now, the bulls of NVIDIA will say, well, that's not going to happen. It's impossible. But you got Burger King for McDonald's. I mean, you always have these, Reebok for Nike. I mean, there's always these competitors that will come up, and competition's positive. But if and when that happens, the valuation will be reset. And because the stock has moved such, it's concerning to me.
Yeah.
And so for the first time in probably about 18 months or more, we've taken a position off. We've trimmed that position in most of our managed accounts. I would say almost all of our managed accounts, we have done that. And that's why if you're a client, have seen some transactions. Now, the unique thing is that we're not moving into another equity space with those funds and those proceeds. And I don't care about being transparent. I mean, I care about it in that I want to be. I'm not secretive of our moves. I don't mind one bit. We are taking a position in an ETF that is a 7 to 10 year treasury that at the time of this video and the time of writing is yielding about 4.2%. And it's a timeout. It's kind of like a way for us to back away a little bit and say, let's book some profits here. Let's sit on the sidelines a little bit over here. We're not talking an astronomical amount of money as far as a portfolio is concerned, as far as percentages. I do, however, believe it'll be the first of a few steps in that direction.
Yeah.
I've mentioned this to many of you. Our view is bullish through the end of this year.
Yeah,
and
just because we're making these moves doesn't mean we're super bearish all of a sudden and we want to take everything off.
No. In fact, we feel strongly about rotation. Rotation is money moving out of certain areas into other areas. One of them, ironically, is bonds. I think that rates will be coming down, yields will be coming up. The other move we did, which was simply a result of it becoming an outsized position, is reducing a little bit of our gold exposure. Gold has been outstanding. We've owned gold because of our view of how it would act with the dollar coming down, the inflationary environment that we're in post-COVID, and it's done very well.
Right.
So it's become an outsized position in most of our accounts, and we're just trimming that, just to be prudent there. It doesn't pay us a dividend. It's moved exceptionally well. Historically, gold takes long periods of kind of timeouts, and so we booked a little profits there as well.
Yeah, I think it's important to know that this is what happens when positions in your portfolio do what you want them to. They run, they have a nice move in the market. It's important to sometimes take those.
I'm happy you brought that up. This was not planned. We have a lot of people that we're seeing coming into our office, clients or otherwise, they've done very, very well in their 401ks. Like they've added a growth fund or a Fidelity Contra fund or whatever, and they're like, I am killing it. And I say, okay, you have a massive position in these 3 stocks. Like, do you know that? Well, no, I didn't. Okay, please, I cannot stress this enough. Whether you talk to an advisor, whether you come in and talk to us, make sure you are looking at rebalancing the passive retirement accounts you have outside of someone's care. I can't stress this enough. This is how people got hurt after the .com. Oh, I'm killing it in my 401k. I'm killing it. Well, it became so overweight in one area when the market corrected, they got killed.
Yeah.
And so I'm not saying, I don't know if that happens today, but I'm just saying you can't just keep opening statements. Oh, I'm killing it. This is amazing. I'm doing, and you have to do some rebalancing. I just think that's prudent. There's no tax consequences in a 401k. There's no cost to that. So please talk to your advisor, talk to us, take some action, or at least review it. How many have we seen in this last week? 4 or 5?
Yeah, exactly.
And they're like, well, I'm just absolutely killing it. I'm like, yeah, you have 80% invested in growth, and of that 80%, 30 of it's in these 3 stocks. Like, just know that. And they're like, whoa, wait a second. I go, yeah, at 60, that's probably a little aggressive. Right. Anyways, I get off that horse.
Okay, let's shift gears a little bit. We have to talk about the debate last night and the upcoming election, because I know that's on people's minds today.
Yeah, this is playing out as we sort of felt it would. And I do believe our catalyst for the election, or I should say the market continuing, is the possibility of the Republicans taking back the presidency, and possibly even Congress.
Yeah,
and so a lot of money on the sideline is Republican money that are just not happy with the current administration. It's not a political discussion. I'm just saying it is what it is. There's a lot of folks, I believe, that are going to review the last time Trump won and the market action thereafter. And if that were to transpire or look like that's going to transpire, I believe the market could follow suit. It would probably be at that time where we would also look to back off a little bit, because our concern is not who wins the presidency, who wins Congress. None of that's our concern. Our concern is fiscal irresponsibility, the current debt levels, interest rates, and the economic situation as a whole. So the debate was last night. I don't think it played out any different than anybody would have expected. Maybe it was more extreme on one side or the other. There's a lot of speculation, but I know you and I were texting, and the minute the debate started, futures started to move up. And I was like, okay. Again, not a political discussion. It's just the market seems to want to favor Trump winning, and every time it looks like he's doing better, the market reacts.
Yeah. And we have to look at it through the lens of how is this going to impact the markets.
Yeah,
and that's how we look
do.
at all of this news and how we evaluate it. We actually just did a webinar a couple months ago now, I think.
That's a great point.
I think people should definitely take a look at. It's about the upcoming election and beyond. So not just what happens until November, but what happens afterwards. We're going to probably put a link there.
I was going to say, we'll put a link in the email. That's big. We did and I know, listen, it was attended. We had hundreds of people attend, but it wasn't the thousands that we've had in the past. You should follow that link if you have questions. Because it's playing out, and history is a guide. So it's playing out similar. We suspect we can see some volatility in the markets, which I think we're going to see. But it's playing out as we thought, and I think that's a very good webinar we did. We'll put a link. Check it out. It's on YouTube. I would definitely watch that.
Good. And then kind of on the same lines, we're going to be doing another webinar here in just a few weeks.
Yeah, we're targeting, what is that, the 17th?
The 17th of
We're going to target July 17th, and I want to take, for the people like me who kind of geek out on this, I want to target a little bit more about what we see happening in the market. So if you're a market person and that kind of stuff interests you, or you just, are interested, we're going to take a deep dive into what's happening in the tech space and the valuation metrics. But, and I think this is very important, what we see in other areas. It's kind of like, there's been a shift in this area and an overweight in this area. And my kids have these toys where, they squeeze the ball and it like the juice or whatever comes to one area of it. I don't know. It's like a squeezing thing, a stress thing. And I just have this feel, and our views are that as tech, in my opinion, could sort of reset valuation-wise, there's other areas that can play catch-up. That's been our
because
theme.
they haven't done much of anything. I mean, those main stocks that we've talked about have really driven the market.
And the other areas have been tied to interest rates, the economic backdrop, which we don't have time to talk about today, but we got further evidence today that the economic backdrop is coming in. I mean, you just look at corporate announcements. Nike, no position, thankfully. Nike reported, slowdown, forward terrible guidance, global demand slowing. I mean, the economic backdrop is changing before our very eyes, which means rates should come in, and other areas of the market that have been doing nothing should play catch up, at least for the short to intermediate term. So we'll talk about that in the webinar.
Certainly.
I'd be remiss not to mention, though, this is kind of cool. This is the last thing we'll talk about. In a couple weeks, Logan and I will be in New York City. We've been asked to come to the floor of the stock exchange to do a few interviews. It's going to be amazing. I've had the privilege of doing that in the past. This will be Logan's first trip to New York.
First time ever in New York City.
And we'll go see the bull.
It's going to be
We'll
awesome.
get a picture in front of the bull. So we're going to go to New York. We have the great privilege of doing a couple of interviews about markets and so forth. We'll certainly send you that. And we'll have a good slice of pizza, and we're going to go to a Yankees game.
Yeah, for sure. And if you guys don't follow us on social media, we'll have some posts and things that are going on when we're on that fun trip. So definitely check that out and see what we're doing in New York City. And I can't wait.
And it's a quick trip. We're like there and
like
back.
2 days.
It's nothing. Like we're there on a Sunday and back on a Monday. But anyways, it'll be fun, and that'll be great. And again, we'll be talking about our views regarding this market. I can't stress enough. Just don't fall asleep. I see people, everybody seems to be making money. You cannot confuse a bull market and intelligence. You should be making money. Markets are going up. You should be making money. Be careful that you're aware of where you're making that money, and is it part of your risk appetite? That's all I can ask. Is it part of your risk appetite? Talk to your advisor, reflect yourself if you're self-directing, or talk to us, et cetera. Very, very important here.
Great. All right. I hope everybody has a great holiday week next week. We love coming to you, and I hope you're enjoying these videos. We'll see you next time.